It's a great day for another Pimp My Strategy live series, and in today's video, we'll be going over a 2-hour strategy from Bing to the Bong on Bybit for Bitcoin. And I want to say at first glance, this strategy was very interesting right out the gate. As always with this series, I don't want to just completely create a new strategy for you. I want to work around your strategy. So my main goal in this strategy, if I can show you the original results right here, was to smooth this equity curve out. Overall, whenever I see an equity curve like this, it's telling me that, hey, we definitely have something here. And you can see from the beginning, it's nice and up and to the right, but there's some jerky motions there. There's a period, particularly right here, that was, I guess, like a couple years of more or less no profit, but no real losses as well. And so my main point of attack was, hey, let's fix that part. If I can do that with relatively simple tools, that will be ideal. But let's go through a strategy first. It's kind of intricate, actually. There's a lot going on because there's different entry conditions for different entry groups. And by the way, if you're looking for the service that we're going to be using in this video to backtest this and also change it around, and by the way, you can even use it to automate as well. It is a Quant Prime service in the link in the description below for Teachable. You can also try it out for 7 days free. All right, cool. So this one again is on the 2-hour time frame, and it is having 2 entry group conditions. So the first entry condition, the first entry group condition, where all these conditions need to be valid simultaneously to enter a position, are going to be PMARP, plot line less than or equal to 18, and BBWP above 50 percentile, and the BBWP moving average must have a negative slope. Or there's another entry group as well. So if all of those conditions are valid, then that will print an entry. However, there's another set of conditions here too for entry B, or group B is how we call it in the skeleton key. And that is for the crown cross for an uptrend, that meaning the 21 versus the 55 EMA, and the advanced stochastic firing off a long signal. So it's not like that complicated when you break it down like this, but it looks like a lot on the actual skeleton key, which perhaps I'll show you a little bit later. In fact, I will show you a little bit later, because that's the whole point. Anyways, for risk management, he's using a basic risk stop. So that's just pulling the most recent horizontal support or resistance, in this case support, on first close. And then he's also having an emergency risk stop, which is going off of the most recent trending low. And then he also has a max stop loss of 3% of position size, no trading Saturdays and Sundays, and profit taking when BBWP is above 97 or PMARP signal line is above 88, or if the crown cross enters into a downtrend with 2 exits and 2 steps with a 0.2% exit cooldown. Okay, a lot of words in there. And like I said, it does sound kind of complicated at the beginning, but it's actually not so bad once we get into it. And like I said, the changes that I make to it are primarily focused on working around the strategy, not like completely adding a whole bunch of new things, like a bunch of different tools and shit like this. But again, here were the results prior to me doing anything with it. I'll show you the results after I've got done with it, which are right here. And again, I was able to smooth out the equity curve quite a fair bit. I was able to I was able to reduce the trade size a little bit, while adding a shit ton more total PNL. In his example, it was at 22,000 for that time period, and in my example, it is just under 35,000. So we're losing a little bit of trades. Profitable trade rate is very similar, but slightly less. Losing about 1% more of trades, and the profit factor going up here, more importantly. So that is exactly what I intended to do with this one. And so I'll show you how I did that. So let's go into it here. I didn't change any of the the major conditions, like I said, but I did change some of the numbers on these. So I played around with the PMARP condition for entry. I found that 18, as he had it, is probably about right. You can go down to 15 if you really want, but I think 18 is okay. Going significantly above, or even going moderately above that, starts to really ruin the result, and going significantly below that starts to get rid of too many trades. It becomes too stringent. For this condition, for PMARP signal line being above 88 for an exit, I kept that the same. And then the BBWP condition I actually changed very slightly. So he had it as BBWP, I believe, closing or sorry, initiating an exit condition if BBWP is above 97. And I just changed that very, very small to 95 here. I didn't change the settings on the BBWP, although I did actually play around with that, and I didn't really find anything like super interesting there. And let me just make sure that I actually have this right to begin with. And yes, okay. Yeah, we're good. All right, nice. I was just need to make double sure here. I'll have his up on the other side. But yeah, I changed that from 97 to 95. So that was my first change. Very, very minimal, very fucking minimal. But again, the results here, I would argue, are significantly different. I mean, it's more than 50%. It's like 60 or 70% difference right there. Need to keep my phone close because I'm awaiting a call. Other than that, his other BBWP condition for entry with the moving average being above 50 kept that the same. The advanced stochastic condition firing off the buy signal, also keeping that the same. For one of his entry groups. And then going all the way down here, I actually got rid of his risk conditions and changed them in a very small way at the very end. But the basic risk stop and the emergency risk stop, I just got rid of those. I wasn't finding that they were really doing much to begin with, to be honest. But what I did change and what I did find slightly better, but definitely better, was the max stop loss. Originally, he had it at 3%, I believe it was. I just put it up to 4%, and that seems about right. This is a 2-hour time frame, and I was going through the trade list and everything, and I was noticing, especially above especially around about 4%, that kind of makes sense. That's where a lot of those losses were falling in around. So just looking through those is kind of how I came to that one. And then from there, I kept everything else the same, except I actually added a day of trading. He originally had just Monday, Tuesday, Wednesday, Thursday, Friday, just weekdays, and ticked off Saturday and Sunday. I actually added Sunday and found that did improve things. Saturday did not. I'll show you how that one looked if I put it on, but I don't think it destroys it too much. Let's just double check. Actually, it improved it now. Oh, I guess with my other conditions, it has made an improvement all around. So, we're going to keep all of these then. I like that much better as well. Like if you keep all of the days trading, that's probably better just because, the more sort of crazy shit you get into, the more and more potential for overfitting you will run into naturally. But yeah, that is the 2-hour long strategy. Like I said, super, super simple changes that I made here, but very effective. And I just want to highlight this, that playing around with things in ways that you might not have really thought about before, while keeping like the whole base of your strategy the same, can really make a humongous difference. And I think that this one really just speaks for itself. Again, the profitable trade rate here did go down, adding in Saturday and Sunday, but because we're getting more trades and because the profit factor is much better than before at 2.6 versus 1.9 in a quarter almost, the total P&L goes up a lot there. So again, small changes make big differences. Once you have a good base, which is shown as something like this, you don't want to fuck around with it too much. You can usually get to where you want to go by playing within that same environment and taking things out rather than putting them in. So I just wanted to kind of highlight this. This was a really good example for that. And I'll post this strategy, of course, in the Discord as well. But yeah, great job to Bing to the Bong on this one. I thought that this one was quite unique when I first looked at it, especially having both of these entry groups here, because most people don't play around with that, because it can get quite confusing. But in this case, it really worked out quite well. Now, I haven't actually looked at this beforehand, but I just want to see if we were to play this same strategy on like a 3-hour time frame, how would it work out? You'd probably need to make some adjustments. I also want to look at an hourly as well, but yeah, 3-hour time frame, not going to be great. Hourly time frame, probably not going to be great as well, to be honest, but just curious, man. Yeah, I mean, we have a base here. So this strategy, it's in itself is a good base, is a good template that you could probably, work through other timeframes on as well. Obviously, in this case, we are focusing on the 2-hour time frame. Maybe the 90-minute will be good because that's quite close to it. Yeah, again, there's something there, but this isn't it. I'll put it that way. But yeah, going back to the 2-hour time frame, I like it. Let's go through the trade analysis, check what this one's doing here. Average winning trade is giving you 3.25% almost. Average losing trade is taking away about 1.25%. You only need 50% strike rate for this one to be massively profitable. In this case, we have over a 50% strike rate, closer to 60 in this case. So yeah, I like it, man. I like it a lot. I think that you did a really good job with this one. And this is one of those strategies where, you're not incurring like a shit ton of drawdown on this. So, you could apply a little bit higher leverage to something like this. That would be okay. It's not going to kill you in this one, but I would still suggest definitely not above. I mean, okay, what's your maximum losing trade here? Let's see. Largest losing, wait, what is it by percentage? Damn it, where is it? Why don't we have by percent? Oh, it is right there. Yeah, 9.31. So I would definitely not use more than 10x leverage. Even that's kind of cutting it close, because that 9.31 losing trade right there, that's going to, well, that won't liquidate you at 10x, but that'll get fucking close. 10% move will. So yeah, I wouldn't go past 10. But in this data set, we have a lot of good events. We have a lot of not a lot of black swans, but we have, of course, the 2022 bear market in 2020 as well. So this one's surviving through those times. That to me is a really good sign, and taking at max a little over 9% loss there. So yeah, 10x. Still a little bit on the risky side, but below 10x, you're probably okay, which I consider honestly levering up at that point. But hey, that's just me. Anyways, I'm going to sign off on that note. As always, I wish everyone the best. A nice, quick and short and sweet one. And again, if you want to post your strategy, just find your way into the Discords, which is linked in the description below. And all you need to do is find your way to the Test Your Strategy section, and it'll bring you right here. And that is where we'll end things for today. With that said, take care, much love, and see you hopefully next time.